What do you think is normal? What's the normal run rate now for jobs growth? Is it the 114 of the previous month?
Well, so there was a very important paper by Tara Watson and Wendy Edelberg from Brookings, or the institute that produced some estimates that says that we will probably have employment growth for the near term at around 200,000, a little bit below. So if that's the case, because of immigration playing such a big role, we should also see a boost to non-farm payrolls. But that's probably going to, over time, fade. So we'll probably get down to the long-run estimate, which we would estimate to be around 100,000.
It begs the question why we took last month so seriously if you don't think we should take the revisions that seriously.
Well, but that's also why jobless claims for the last few weeks have been signaling that everything is just fine. If you also look at a broad range of other indicators, as we just ran through, both with travel, with restaurant bookings, hotel bookings, also look, broadly speaking, at how many companies go into default. There's weekly data also for that. We also have a general picture that the economy is just not slowing down. This whole narrative, as you just spoke about with Target, Walmart, TJ Maxx, this whole narrative that we are slowing down is just not evident in the data. So that's why I think that we should, in markets, think about the outlook for the Fed with that backdrop.
You've said in the past, over the past few months, that you didn't think that any rate cuts were necessary. This comes at a time, at least not this year, this comes at a time we've got 100 basis points of rate cuts being baked into the market, and you're saying that it's likely, most likely, that the Fed is going to go next month. What do you think the consequence will be of a Fed that starts cutting next month at a time when you still, sounds like, don't think it's necessary? Well,
that's why, as Neil Dodder was just saying, there is this whole concept that we are way, way too restrictive. But that is only if you have R-star, or where the Fed is going, at a much lower level, maybe I say 2.5 or 2.8, as the long-run dot says. Then it's true that we are restrictive. Then you need to see the Fed cutting rates quickly. But what if R-star, what if where we're going is more close to 4, 4.5? Then we're not in a hurry. So the main test of the answer to your question is, what is the incoming data telling us? The Fed last hiked rates in July of 2023, and still, now, 12, 13 months later, we're still waiting for the data to slow down, and it's not happening in any meaningful way. So if Godot didn't arrive here over the last really 18, 24 months, why should Godot arrive in August of 2024?
Some people say Godot is leaving his sort of remnants in different places and giving us a sense that maybe he's more present than we previously thought. And we're pointing to potentially some of the retail sales or some of the negative readings into the non-farm payrolls that we got a couple weeks ago. At what point do you say we still do not need rate cuts, that you have conviction based on all the strength you were just talking about, that Godot is not around, Godot is not coming, and that actually this is a very different environmental environment for the economy?
Well, I think we see that reflected in speeches by different FOMC members. Some FOMC members, including Nikki Bowman, have been saying, well, hold on, I need more evidence that we should cut interest rates. Others are more convinced. So getting the committee together for Jay Powell and making sure that the committee is moving gradually in the direction of interest rates moving lower, that does take some time. So I think they have agreed now that they will cut interest rates 25 basis points in September. But after that, I think everything is open because the data, it's not slowing down. And again, the retailers reporting earnings, and directly the Walmart CEO said, we're not seeing broad-based slowdown for the consumer. We need to take that seriously when that's 70% of GDP. So yes, I do understand that in markets, we quote unquote want the economy to slow down. And we're so hooked on the narrative from the Fed that interest rates need to normalize. But we have plenty of time for normalizing interest rates. So that's why let's get that rate cut here on the September the 18th. And that's what Jay Powell will say here at Jackson Hole. But after that, I still think that they are open to, well, let's wait and see exactly how the data plays out.